Let's take a closer look in terms of what is happening in the markets from a trader's perspective. For that, Diana Avigdor is joining us. She's a portfolio manager and head of trading with Barometer Capital Management. Diana, good to see you. Thanks for your
Catherine.
time. Hi.
My pleasure.
I'd mentioned that it was busier this morning. Quite quiet now from what I'm understanding in terms of the futures market and the S&P, that is for sure. What are you seeing?
I feel the same thing. You know, this week has been incredible. You can see that if we close where we are here, we're going to say that we were flat on the week or almost flat on the week. But if if you watched it on Tuesday or Monday and then came back today, nothing happened, right? But so much has happened. We've round stripped so many points. Not once, quite a few times. It's been extremely volatile with overall a lot of volume. It almost feels like, Catherine, the reason it's quiet is almost as if a bit of an overhang, like, okay, we can rest a bit right now. Market's okay. It doesn't look like it's going to be extremely volatile and they slip down or slip up and we must be awake. So it just feels this afternoon that it's just kind of stabilized, and ironically, it's what made it quieter because the anxiety has dissipated a little bit. Volumes have been extremely high, so I just wanted to mention on Monday, it was a Canadian holiday, but U.S. was open. It was a lot of systematic selling pressure. It was a very, very tough day out there, and volumes were extremely high. Morgan Stanley's trading desk ran a report where they did the ratio to futures and cash. That was 2.2 times the amount of futures to cash, which gave an indication that a lot of it was programmatic or quantitative or basket-like. So it was very heavy. And right now we're just, I think that it's cleansed up a bit and it's resting.
So Diana, let's just explain a little bit more about what that means in terms of why do we care if it's programmatic? Why do we care if it's quant funds doing it? What does that really mean to the average investor?
We care because you need to know and then decide whether it matters to you. And what you need to know is that the quantitative programmatic trading, whose mandate is to achieve a certain amount of volatility or a certain amount of exposure, has nothing to do about your fundamental view of Franco-Nevada, for example. So if in the course of this activity your stock moves to an extent that makes you worried that something fundamental is happening with your stock, if you know that the market is such that this is what's occurring right now, maybe you allow yourself a higher risk tolerance or a bigger band or a wider band for your holdings of your stock, or maybe if something sells off to a large extent, not because of a fundamental reason, but because of how markets are these days, maybe you take that extra cash you were holding back on, and maybe now is the time to buy.
Right. So you always really kind of want to know who's participating in the market, who's buying, who's selling before you kind of make a decision. That's the market intelligence that we used to have so much of if you were really good at it 10, 15 years ago. But with all the high frequency trading, programmatic trading, it's made it really difficult for institutional money managers, in my opinion, but also for the individual investor to not essentially get spooked.
It changed facets, and slowly you're getting your arms around it if you know where to look. And I think that, it's funny I say that, but I'm not trying to do marketing. Honestly, there are ways that professionals, you look at a million different things. Market has been democratized a lot, yes. And information has been democratized a lot, yes. And so everybody seems to have access to the same information. But it's in the way that you have to put it together now, all the different pieces, you have to bring it and glue them back together into the picture. So when you look at things like what I mentioned, say futures volume to cash volume, the fundamental investor in Franco-Nevada is not trading $424 billion worth of futures in 6.5 hours relative to $190 billion of cash. So you can see that it's not the fundamental single stock that has most of the volume, and therefore you can make assumptions that it was more programmatic.
Understood.
Also, when you watch the market and it just kind of slips off all at once, you know that it's 1,000 stocks that are being sold all at the same time, the same minute. Again, that has nothing to do with your fundamental investing. So I just say, if you're a trader, manage your risk. If you're a long-term investor, you must ignore some of the noise or how much you are able to tolerate in your volatility parameters.
And Diana, as it relates to, you've mentioned Franco-Nevada, you don't have, from what I understand, that many Canadian stocks in your portfolio, or that much Canadian exposure, but I do believe you have Franco-Nevada. Give us your sense in terms of why you own that, and not many other ones. Yeah,
not many other ones. Some of our portfolios are anywhere between 30 to 40% Canadian exposure, and the rest is U.S. This is not against Canada. Canadian stock market is not as diversified in sectors and opportunities as the U.S. market. Not to mention that the U.S. market and the economy is the cleanest shirt in the laundry right now. But sectors such as payment sector or technology or healthcare, we are less able to explore that in Canadian markets. Franco, I keep mentioning it because I'm focused on it. They reported a very good quarter. And yes, we are on the gold trade right now. I don't always love gold. It's always very volatile and it always seems to be just a trade. But with $15 trillion in debt globally in negative rate territory, and doesn't look like it's going to subside, whether there's inflation or deflation, we can argue that in a different conversation. But with $15 trillion of negative debt, gold seems to be a lot less expensive to hold. Some of the arguments against gold is that it's a store of value, but it costs money to store. So with negative debt, with Germany at minus 50, with US going to lower, with France at minus 35 and so forth, it looks like global yields are going down or staying down.
With respect to gold, what kind of exposure do you want, Diana? I mean, obviously Franco-Nevada is one way, but are you also buying just a gold ETF to give exposure to your clients?
No, we're staying with single stock right now. Gold ETF, you can at times that you believe in gold, a stock, a commodity stock is a better way or a bigger way or a more levered way or a way to give you more return than just an ETF. If you want to have a generic exposure, sure, why not? We like Franco for other reasons. They have business reasons that you can buy them. For example, their Cobre Panama mine in Panama, copper mine, is poised to grow and contribute to revenues in a very meaningful way over the next couple of years. So, you know, that's a business reason, and that's not just a gold exposure. Franco-Nevada also is a royalty company. So, you know, it really is hedged against cost volatilities out there. It has no debt. So there are some business reasons that you buy companies. But if you just want to have exposure and not take any business risk, then you can do an ETF.
Okay, just lastly here, Diana, we kind of touched upon it a little bit, but as it relates to short-term versus long-term investing and the approach to the market, just given all these uncertainties and the volatility. I mean, some of the biggest investors in the world are saying, I don't know what the right narrative is, but what's your piece of advice for our viewers?
I think that the market is okay here. I think the market is going to be doing a little bit of work, so it's going to be a little choppy for the next few weeks until the headlines subside. Earnings reason was tolerable. It's okay. It's still going on. It wasn't huge, but it's okay. And the alternatives are not really out there. I don't see a recession on the horizon yet. All the people that are talking about a recession, it'll come one day. I just don't think that you can go to cash now. Given that everything is still looking okay and moderate growth. You can find companies with great dividend yields, and there are some great companies like Lightspeed or other growth companies that are actually garnering market share out there.
Okay, Diana, we'll leave it there. Great to catch up with you. Thank you.
Thank you.
That's Diana Avigdor, portfolio manager and head of trading with Barometer Capital Management.